Adrian Foster, Head of Investment Markets Research for Asia at Rabobank International. Is it, I guess, all hands right now, just waiting and waiting for a Bernanke speech?
I guess waiting probably is the order of the day, but I'm not sure that Bernanke's speech actually gives us too much clarity. It's worth noting, of course, a lot of expectations around QE3, maybe a boost to equity markets to come out of that. Of course, QE2 was claimed to have provided a boost to equity markets, which possibly did for a little while, but I think the last 2 or 3 weeks have perhaps shown us that that was a very short-lived boost, if indeed there was one. Markets have reversed brutally. So QE3, perhaps there's something there for equity markets, but it's worth noting QE3 is a decision by the US Federal Reserve, not by Bernanke talking to the world central bankers at a symposium in Jackson Hole. So I think possibly as much as we can expect is some discussion of the various tools that they have left, the effectiveness of those tools or their assessment of the effectiveness, and I think the market will actually be left guessing after Jackson Hole's speech on Friday, so I don't think it's going to be a real clarifying event.
Adrian, Barclays says that the 10-year Treasury is pricing in more than $500 billion US dollars in the QE3. But they are pricing it in, that's the point. Some are saying it's not going to happen, but they need a lot more, some others are saying.
I think it's
a really big punch.
Yeah, well, I think the 10 years might well be pricing in just a very, very lacklustre economy, which is what I think we do have. I'm not sure that a QE3 is really going to change that picture sharply. There's certainly, in a tactical sense, there'll be some positions put on around Friday, I would guess. But I don't think that my take on the 10-year yield on the US curve is pricing in an ongoing lacklustre, particularly by historical standards, disappointing rate of recovery, and I think that's exactly what we're going to have in the US.
Yeah, I was speaking to an investor this morning who manages about $54 billion in assets, and it just seems that it seems like the prevailing thought is we're going to get a QE3, and he's really afraid of what's going to happen on Friday when we don't get the message that we're looking for. We're going to see a huge sell-off and a big slide again in equity markets, turmoil?
Well, look, of course, I don't like to argue with someone who's in charge of so much money because it's a lot more than I have. But my guess is it's not going to be a keystone event. I think there'll be a lot of interest in the speech.
Right.
I think a lot of people are aware that Jackson Hole is not a policy forum. It's a discussion forum where the world central bankers get together, and the Federal Reserve is the one that decides on the potential for QE3.
But you know what it could be, Adrian? It's just the markets want direction from someone. Angela Merkel today, yes, on Sunday, saying that the markets can't tell us what to do. Well, they are telling you what to do. But they need direction, they need some sort of clarity, and Ben Bernanke would see more pressures on him because nobody else is giving clarity of what to do next.
Yeah.
That's why it's so important.
Yeah, sure. I guess you could argue you wouldn't want to be in his shoes, and he's got a difficult balancing act to carry off.
Yeah.
If you look at what the Federal Reserve, the options they have, in fact, I see them as quite limited. So QE2, the US economy actually weakened through the period of QE2. Not because of QE2, but QE2 didn't stop it from happening. But jobs growth slowed in the US. There was, for a little while there, look, perhaps equity markets had a bit of a boost. That's been paid back brutally in the last couple of weeks. So I think I look at the US Fed, they cut rates from 5.25 to less than a quarter. That was where they got their monetary stimulus into the economy. Now they're sort of, I guess, playing around the edges, just squeezing the last little bit out of monetary stimulus that they can get, and it doesn't actually amount to much, is my take.
I do want to ask about quantitative easing 3 again. I've of course been obsessed by it, but it's pretty important. But the impact for Asia, now if they were to do it, and some are saying they need a far bigger punch than 500 billion because QE2 did not work, Asia and particularly China are going to be pretty frustrated, stroke angry if it happens again, because they're going to get inflation, Hong Kong inflation already above 7%. It's not going to be good, is it?
There's certainly maybe a better marketing job that the US Fed could do with this QE3, or QE in general. It's seen as a policy directly aimed at weakening the currency. And of course, I think that's where trading partners take issue with it. It's a little bit of a beggar-thy-neighbour approach to monetary policy. I think, look at it from the Fed's perspective, that's not how they see it. They're really just wringing out the last bit of monetary stimulus they can get. They're looking to get the yield curve lower. I guess they would say that they're leaving the currency to other people to think about, and they're really focused on the domestic economy. And at the end of the day, I have to agree, the US Fed's job is, of course, the US economy. Whether they have much room left in these tools to actually go boosting the economy, I've got serious doubts over. But I fully agree that's their policy, and I think the response to their Asian counterparts would be, well, it's your decision to peg to your currency or to manage your currency against ours. That's your issue, not ours.
Interesting as well, we've got the Chinese buying up European bonds. We've got Sarkozy flying to Beijing to meet the president again on Thursday. So it just seems that China is where it's at. China is almost a saving grace.
Oh, yeah, look around the world. Just look at the creditor countries, the debtor countries. A major one against those creditor countries, of course, is China. I guess in many ways it's a new guy on the block. won't have the familiarity with a lot of the markets and a lot of the options that are out there. So it's understandable. I think if you're looking to raise funds, you'd be knocking on China's door and asking whether they'd like to get involved.
So, Adrian, do you think that China pays more attention now, for example, to Germany's, I know in your notes, Germany's investor conference reading out today? Are they paying more interest and more close attention to all the figures out of Europe? Does it matter a lot more?
I think if you look at Europe as a overall challenged region with a few really bright spots in the middle and of course Germany central amongst them, I guess the question is will the German economy continue growing at sorts of rates where Germany feels able to go supporting the periphery. So I think in that sense every little indicator we're getting out of Germany is a particular interest. I'm not at all surprised if China is indeed looking at it on that basis as well.
Seconds against me, a doctor of economics, lecturer. If you were giving a lecture today to your students, former students, what would you be talking about? What's the key point?
Globally?
Yeah.
I think when you get a deep recession, as we've just seen, I think we've seen the policy tools thrown at it, and my take is you then need to give them time to work. I think central banks are perhaps, policymakers in general, perhaps a little bit hyperactive in terms of this is the era of instant gratification. I think perhaps we just need to wait a little bit and see some of these imbalances correct.
Do you think they've been proactive or actually reactive, central banks?
Reactive? Oh, well, no, that's perhaps unfair. No, that's perhaps unfair. Proactive, but I think hyperactive. I think there's some good policy settings put in place, and they then need to fight the good fight and let those settings work through the system. And
everyone some are saying, Ben Bernanke, this is your fault, but actually Alan Greenspan is more to blame, isn't he?
Well, you can point to some of the ultra-easy settings or maybe overly easy settings in US policy for quite a long time. They occurred under Greenspan's watch, so I think that debate would have to involve some discussion of his policy settings, and I think Bernanke was a party to some of them, so I guess it's understandable. I think it's right that we do go questioning and discussing these issues.
QE3, well, what I'm wondering is if we're seeing speculation, of course we're seeing speculation in the markets among investors today, perhaps some of this buying activity due to the fact that people expect a QE3, but I wonder what happens if Bernanke doesn't deliver, and what the market expects. What do you think of that?
Yeah, I characterise equity markets over the last month or so, clearly weak in the first half of August, and I think that was well-founded. There was downward revised expectations about global growth. We saw that debt ceiling debate in the US, which I think has surprised a lot of people outside of the US, the acrimoniousness there. And of course fiscal tightening, which to whatever degree then slows the economy into next year. So I think that accounts for some of the weakness in markets we saw early in August. Since then, I think we've just been bouncing around with some pretty massive moves, and I'd put that at the door of the Fed, in fact. QE2 did boost equity prices for a while. That's been repaid with interest over the last month or so, and now I think its net effect is it's just aiding volatility. And I know it's a bad analogy, but water sloshing around in a bucket, I think, is kind of the picture that we've got in the equity market space. And it's an issue which I think the central bankers don't address in any meaningful sense, but I think it's a cost of their policy.
I see.
All right, well, let's move on and take a look at Asia, since we've been talking the heck out of QE3. What about China? Contraction again for a second straight month, and we're looking at these PMI flash numbers, again, pointing to another month of contraction, but not a hard landing, according to HSBC. Yeah,
I think that's the right assessment. My take on China is it's grown in the 10 to 11% range in the last couple of years. It's slowed down now to about the 8 to 9% range. So in a historical context, probably not as impressive as perhaps we might hope for, but I think still a reasonable kind of level, a reasonable kind of rate. If you look to the services sector PMIs, they're still 50 plus, and of course the services sector, a bigger share of the economy, tends to be a lot less cyclical than manufacturing as well. So the overall economy, I think, continues to grow at a reasonable sort of clip. And if anything, the net message against the current concerns out there about global and regional and Chinese growth momentum, the net message of that release today, slightly on the supportive side of expectations, I think.
And with today, the regional, you mentioned the regional, Thailand obviously today is getting the headlines. You've got Yingluck speaking in Thailand, her brother speaking in Tokyo. I mean, I've had many investors saying this is the place post-election really to get your money into. It's a great investment opportunity, it's a good economy, etc. Would you agree?
Yeah, to be honest, I'm no stock picker, so in that sense I'm perhaps not the best person to ask.
The economy, though.
Yeah, but I do think international investors, again, have perhaps been a little bit on the sidelines. We've seen quite a bit of political upheaval there over the last few years. It's hard for international investors to participate fully when against that backdrop. So there probably is a lot of underweight investors out there. I think it's a relatively robust economy. If you look at FX reserves around the region, it's Southeast Asia has seen the biggest percentage gains in FX reserves through the last year and a half or so.
Absolutely.
And that tells me global investors are coming back to Southeast Asia, having perhaps focused on Northeast Asia for a little bit in the early stages of this global recovery.
Well, the two best performing markets across Asia Pacific is Indonesia and Thailand. I mean, similarly to the gains for the year. So this is all about domestic demand right now when you have global turmoil elsewhere.
Yeah, I guess, sorry.
No. Go ahead.
You know, when things look good, when demand in the West...
Gentlemanly, yes.
sorry, I'm not.
Yeah.
But when demand look good in the West, then it makes sense that the high-tech providers are the ones participating in that, the Koreas, the Taiwans, what have you. When the global outlook looks perhaps a little bit less impressive, then I think perhaps we come back to the ones that perhaps never rode that euphoria high.
What's going on in Korea today? I mean, it's a major rally right now, 2.5%, recovering a lot from the losses we saw. And a lot of this is technology, right? A lot of these are exporting names, but it seems like investors believe there's some bargains to be found.
Yeah, I'm sure there is. I think markets, including Korea, particularly Korea, have been beaten down quite significantly the last month or so. So I think perhaps there's some value popping up there.
Well, Adrian, you talk about Korea, and everyone I talk to who goes there, and investors as well, they're so excited about it. And Samsung, I mean, I think we're seeing Samsung up 4.5% today. When you have such a quality company that's been beaten down so much, of course it's a buying opportunity. A lot of shipping names are higher. We've been talking about STX Pan Ocean all morning. And South Korea, despite some near-term worries about the economy, it's still a huge success story. Look at how far South Korea's come and its export profile. I think it's certainly a good place for investors. However, that's not a recommendation.
An analyst instead of a journalist. That was quite convincing.
Did you see the New York Times piece about star stock analysts getting paid? The day of the star stock analyst is back, $3 million paychecks from the big banks.
This is a rehab counseling session.
Well,
I'm just putting it out there.
That's what it sounds like. Yeah. Come visit our land.
Can I throw in a question? The other time's against me. Being an Australian, and proud Australian, the rugby is soon upon us.
Oh.
Zeb's favourite topic.
Here we go. Adrian, don't ask me about
this stuff. Really.
I'm a bit random,
okay.
you know that,
Yes,
Susan.
yes, that's true. Yes, go ahead.
So of course, the World Cup's coming up in New Zealand in a couple of weeks' time.
Yeah.
I think New Zealand have to be favourites, that's my take. But I just wonder, it's all about how you play on the days, and I wonder whether Australia might just be peaking at the right time. They've had a couple of good games recently.
But in the office, you've got to bet against New Zealand.
I've taken the field against New Zealand, which I think my colleague has given me very good odds.
Right. How do you invest based on your instincts on rugby? You just call the bookie? What are the odds?
Rubber ball makers, I don't know.
Okay, well, you went there, so you have to take it elsewhere.
Or from the
rugby. Yeah, I don't know how to follow off that. Do you? North America?
Just say that England are going to win. Obviously, the US may have a chance, and Canada are also involved. So it's a four-way conversation.
We rarely use teleprompters here, but this is a topic that I need the teleprompter for. So.
It was basketball last week. I'm just throwing the rugby this week, just as we're getting a bit closer.
Yeah, wrap it up. Okay, coming up next. Yes, thank you for dropping by and bearing with John. Thank you for that.